Good evening, guests and members. This is our monthly meeting of the International Model Stock Investment Club. We are a model club under Better Investing, and we're open to the public, which allows us to have members attend and watch how we operate the club and how we invest. Our meetings are held on the third Monday of each month at this time, 6 p.m. Pacific and 9 p.m. Eastern. The exception being in December when we meet on the second Monday of the month because of the holidays. All our meetings and stock studies are held online using GoToMeeting, allowing us to have members from around the world. And currently we have members from the United States, Canada, and China. Guests, you're going to be muted during the meeting, but at the end, you'll have an opportunity to ask questions and give us any comments or feedback that you have on the meeting. Just a disclaimer, any companies we mention today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company that you're interested in before you make an investment decision. And we may mention some products or services that are not endorsed by Better Investing or this club. The views of expressed today are those of our members and don't necessarily represent those of Better Investing. And we are recording this meeting and we'll be posting the recording on our YouTube channel in case you'd like to see it again. All right, and with that, I will, is Matt here today? Jay, is Matt here?
I'm here, Katie.
Do you want to go through the agenda, Matt?
Yeah, I'll just pull it up here really quick. Oh, there you go. You got it.
Yeah.
Perfect. Yeah, so I guess it's just all quarterly reports this time. I figured we could, you know, since some people like to present even though they rated hold, we could just give everyone 8 minutes. If you're just a hold and there's no questions, how about we just move on instead of trying to run through all 11? That was kind of my thought for tonight.
Okay, that's fine.
Right, cool. So yeah, with that, I guess the one we do have to do kind of no matter what is CSIQ Canadian Solar, because it's an annual. And then we also got IPGP, Disney, Q2, Skyworks, Lam Research, Facebook, Schwab, Algonquin Power, Comcast, FleetCor, and Air Lease. The last one. Oh, and then the Treasurer's report first. So I'll have the timer going, so I'll try to shout out time. But that basically gives us around 8 minutes a person for the quarterly report, if you want to go.
Okay.
All right.
And so I guess, Tom, you'll go ahead with the Treasurer's report. And I will try to make you a presenter.
You need to give it to me. And I'll unmute myself there.
Change presenters. Tom.
Okay, thank you. Let's see, guess I'm not entirely ready here. All right, I thought I had stuff up. Oh, well. Okay. These are our holdings. I think the valuation date is probably, well, I put it in as Sunday, so I think we probably have Friday's prices. I can go to another screen here. Many of you are probably aware the market had a significant jump today, so some of our stocks. You can't hear me? What's wrong? Can you hear me?
We can hear you. Maybe he meant make your screen a bit bigger.
I can't see what you're doing.
Yeah,
that's always an issue for Bernard.
right.
Okay.
I can't see. All it says is International Model Stock Investment Club meeting.
Well, mine says monthly
The rest of what
report.
you're showing us, Tom, I'm sorry. Might be my internet.
Oh, sorry.
Okay, go ahead, but I can't see it.
Okay, well, this is the
Maybe I could watch
valuation
the.
statement. It should say monthly report and valuation statement. These are the stocks we have. And like I was saying, the valuations are probably Friday. I put this. Oh, wait a minute. There we go. I put this into Morningstar, the portfolio, and this is a sort by price change. So Air Lease was up 18% today. BJ's was up 11. Heiko was up 9. All of our stocks were up today except Domino's, which was down 3%, which is pretty wild. So I guess there was some good news today. There was 8 patients, I think, were so there was positive reports on the test of a vaccine for coronavirus. So too bad we didn't own any of that company. Moderna, I think, is the name. So anyway, that's our holdings. I don't know if anybody. I guess we can. If it hasn't changed, I guess since last month we added innovative industrial properties. I guess.
Which is just for
it's a marijuana
maybe
REIT.
for people that weren't here last time. It's a marijuana REIT holding properties for growing medical marijuana and recreational, I guess.
And I made a little presentation here I wanted to show. How do I get to slideshow? There we go. Using.
I can't see.
Well, I'm sorry. This is as big as it's going to get.
No, we can see just fine.
This I use the selling guidelines from this Mid-Michigan webinars that were over the weekend, and so the first look at quality of our portfolio, and quality takes they generate a number which takes into account financial strength, relative growth, relative profitability, and earning stability. And I'm not really prepared to explain how they arrive at those things, but that's what they say it's based on. Here's our portfolio sorted by quality from lowest to highest, and the industrial properties and BJ's stand out. They're like way low, and all the others are in fairly in the blue or the green as far as the quality. One thing they mentioned about decreasing quality sometimes leads to decreasing price of the stock, and one of the stocks I'm covering here, Skyworks, has had decreasing quality. If we get the chance, I can go over that. And they talked about if stocks are not keeping up with the market, they recommend 20%. If your stock is trailing the market by 20%, then that's a signal you should maybe think about bailing out. And so this takes into account today's prices. It doesn't have anything to do with what we purchased the stock at, but this is a 12-month total return. BJ's and Air Lease have trailed. They're down more than the market. The Standard & Poor's is up 5.3%, and the broad market, Schwab, that includes some small caps, that's up 3.5%. And then they also have something called their par value, and these are based on, I guess, Friday's prices. So everything that went up, the par value is going to go down because the price is higher. So according to them, the idea is to keep your par value up. You want to weed out stocks that have a lower par value, and that's potential annual return, which would, I guess, be like probably our compound annual return average PE. So, and add stocks with higher potential return. So that's for that. So
That's really that's a very good presentation, Tom. Thank you for doing that part. Because I think it gives us a good overview of the portfolio.
Okay.
We should do that on a regular basis, maybe.
Okay, thank you. Well, it wasn't a whole lot of work. I could do it. It's just cut and paste.
Yep.
So Tom, actually before the meeting, Henny and I were just talking about one of the companies using the manifesto. There's because I don't have manifesto, there's a graph that they were talking about in that presentation. Mark and Ken was saying, was par?
Jay, sorry to interrupt you. I took that graph and I'll show it when I present.
Oh, okay, you got that graph.
Yeah.
Okay.
I can.
So I'm just curious. Yeah, there you go. That's the graph. Maybe we should take a look at that graph as what they're talking about.
The graph for
Right.
Air Lease. I
Yeah.
don't know. You want me to hit it now or?
No, when we show each company, maybe we can take a look at that graph, because we were talking about when to buy, when to sell. Yeah. Okay.
Okay.
It's kind of like an additional indicator, help us to gauge. Yeah.
Okay.
Okay.
So I put a portfolio in Manifest. I can do that. So I don't know. I'm probably running out of time here. So I don't know. Does anybody have any questions or want me to hit any other screens here?
My concern is the BJ's we only have 1%. I remember this is a exception company for us when this got presented. Who's following? I think Matt's following BJ. Maybe next time when somebody.
Okay.
What's the question, Jay? Sorry, I didn't hear your question.
BJ, we only have 1%. When we bought
usually
BJ,
we bought BJ as a sort of and I'd like to make a few comments after we're finished this.
So I guess we bought it for $1,000. It looks like it's down less than 500.
Yeah. But it's also 1% of the portfolio. I think what Jay is alluding to is that either we buy more so that it represents a minimum 3 to 5%, or might want to consider selling it because it's a lot of work for 1% and it's not going to make a huge impact.
I move we sell.
Well, we'll get to that, I guess.
Yeah, we get to that wherever. I think Matt's following the company.
It's down 50%. Restaurants are not going to be doing well in the near term. I can't see hanging on to it. But okay. So I guess I'll pass it along to who's ever next.
Okay. Well, I just wanted to make a few comments if people could indulge me for just 1 or 2 minutes. So I watched the Berkshire Hathaway annual meeting with Warren Buffett on YouTube, and
I'm trying to talk.
And you know, Buffett is holding $130 billion in cash. And we've had a number of discussions in the past because we were holding a lot of cash that we should buy, and we ended up making some sort of, I will say, quick decisions without maybe doing a full market assessment. And we bought a few companies, and I won't say which ones. But the last decade, we've had a pretty significant uptick in the market, and our portfolio was doing very well. I think at one time we were up 35% on an annualized basis, which is amazing. And I think going forward, things are going to be a lot more challenging. There's going to be a lot more volatility, and we're going to have to be very careful about the companies that we pick, and we're going to have to, I think, where we need to really focus, because and I've said this before a few times, but it's very easy to do an SSG. I can do one in less than 5 minutes, and it's a very mechanical process. And I think, you know, going forward, we really need to pay attention to the market that a company's in, and how that market is going to behave overall. And Tom, you've alluded to, you know, the restaurant business, for example, or the airline business. I think we're gonna see some fundamental changes in certain markets going forward, and I don't think things are going to return back to normal in all of those markets. So going forward, I think we need to understand how things are going to change, what sectors might do better than others because of those fundamental changes. You know, a lot of people are talking about COVID-19 accelerating certain trends that were that you know were maybe going to take longer to manifest themselves, and now the current situation, you know, is accelerating those trends. And one of those that I'm familiar with is working from home. I have a friend who works for a very large bank, one of Canada's largest banks, and his boss told him that, you know, they don't see a reason why they should invest in very expensive real estate downtown. A lot of people were concerned about productivity when people work from home. That doesn't seem to be an issue anymore. And in fact, people seem to be working longer hours. So I think a lot of companies are going to start to change the way they do business. And that's going to impact certain sectors, maybe commercial real estate. So just going forward, I think when we do our stock studies, it's great to do an SSG, but we also have to really look at the market in a lot of detail, and the sector that a company's in, and look at how that might have changed given you know, this whole pandemic. So that's my rant. So thanks
Okay.
for listening.
Thanks, Andy.
Okay, who gets the hot potato?
Jane's supposed to do the annual. She has VPN issue from China. She's downloading webinar from her iPhone. I asked her to try again, use iPhone to VPN. So she's trying. So maybe we go to the next person first. She just texted me.
Looks like it's you, Haney.
Oh, okay.
On the agenda anyway. IPGP.
Yes. So let me change presenters. And so IPGP, so this is my report, which I sent to everyone. So I did this report on May 15th, 3 days ago, I guess. And I had a lot of trouble I did an SSG, and I had a lot of trouble trying to pick sales and EPS growth projections. I looked at a number of different sources, and they were all over the map. But I decided to take the most optimistic, which was, I think, Yahoo Finance. And so I think the sales growth rate that they were projecting was 13.6%. And I used the preferred procedure without really changing very much in any of the different criteria, tax rate and so on, and shares outstanding, etc. And I got a 13.8% or a growth rate from using the preferred procedure. And I'll mention, I'll just come back to those in a second when I show you the SSG. The quarterly data, the most recent quarter, sales compared to the same quarter last year down 21% roughly, pre-tax profit down 33.5%, and earnings down again 33.3%. And this, as you can see, the trailing 4 quarters, everything was down, and that had to do with mostly the coronavirus situation. The current PE is 48.5, and the average PE for the 5-year average is 26. So the relative PE, which is current over average, is 1.83, almost 2. The upside downside ratio is invalid, and I'll get to that in a second.
Hey,
Yes, Bernard. Hello. Bernard, I can't hear you. I'm sorry.
I can't see your screen. I still just seeing the nice screen that Tom had up. I can't see what you're showing us. I still have on my screen.
Yeah, I
There
think
must
what's
be a problem
happening.
on your end, Bernard,
Sorry.
because
I think your
Yeah.
internet must be lagging if it's not changing over right away.
Yeah.
So it must be really slow.
Also, your voice is cutting in and out too, Bernard. That could be the internet impact as well. Yeah.
Okay, but
I think it is the internet because I got this new headset.
Okay, well, I'll just maybe you can just listen.
And I'm not seeing the right picture.
Okay.
All right.
well, let's move on.
Okay, so I also checked the 10Q to see what management had to say, and they had a whole bunch of qualifying statements. So sales, for example, were negatively affected by COVID-19, and most significantly in Asia. And then they're starting to see a lot of price competition, and so they're having to reduce their prices to compete. And particularly in China, I've looked at their competitors, and there must be at least 6 competitors in China that compete directly with these guys. So even though China's starting to open up and sales are starting to increase, their sales in Western Europe, in North America, and other Asian countries are way down. They are experiencing some difficulties with their production in the sense of related to government directives for social distancing and so on. And they're starting to see some supply chain disruptions. So they're having to pay extra costs for shipping. There's a lack of availability of certain cargo flights, so they can't get some spare parts. So delays and extra costs in terms of supplies. And then they are signaling that there may be potential layoffs if there's extended conditions around COVID-19. Also, they don't have a lot of visibility on the economy going forward, and they see maybe some lower demand and higher production costs, depending again on what government regulations are when they fully open up. And then there's this whole issue of tariffs. There's been a lot of talk between the U.S. and China about tariffs. They've already experienced that earlier on when the tariff discussions were going on, and so they're seeing some retaliatory tariffs by China. And again, they mentioned this competition. So, and then on top of everything else, there's the foreign exchange risk. So a good chunk of their revenue comes from China, from Europe, and everything is down right now relative to the U.S. dollar. The dollar is stronger than most currencies right now, so that's causing them some issues as well. So I think given all of those things, there's quite a bit of uncertainty going forward. Now let me just switch quickly to the SSG, and I can show you. So all of what I've just mentioned is kind of anecdotal, right? So it's management. They're kind of just making sure that people are aware that there may be some issues going forward. But you can see here, pretty significant drop in earnings, and sales are starting to go down. And then you look over here, and the closing price is $146. And the high this year was 166, and that's why the PE is so high. So the price is near the yearly high. The low was 98. But what's really a bit troubling is if I look at the quarterly data, and you can see there's since September of 2017, earnings have been dropping significantly. So this was way before COVID-19. So definitely they're having some issues with pricing and competition.
What's going on here?
We should probably mute.
Oh yeah, because
somebody.
Okay, go ahead. Because the
I'm not sure what that is.
Oh, Jesus. I'm trying to shut off the sound. Oh.
Bernard, can you log out and then log back in and see what happens?
I just turned off the sound. Is it okay now?
Yes.
Tom?
Yes.
Oh, good. Thank you.
And you sound good too.
Oh, I'm on the phone now.
Okay.
Oh, okay. That's a lot better.
But I can't see what you're talking about. I still just have the screen that Tom had.
Well, it's a problem on your end, Bernard.
Okay.
So,
I'll just watch and listen.
So again, I've used a very so sorry. Let me just go back. I apologize. I was a bit thrown off here a little bit. Is this no? I don't. I wanted to show you the SSG. I can't remember how to get that.
you want?
Oh, my studies, I guess.
Well, you have it up there.
you have up there.
No, I do, but it's not. There's no numbers. I wanted to bring up the.
Oh, okay. Go to quick navigation. Go on top. Quick navigation.
The green box.
The green box.
Right.
Yeah.
There we go.
Click that.
Click.
Oh, right. Okay.
Yeah.
This one. Yeah. Thank you. Okay, so here's I put in this 13.6 for sales from Yahoo, and then preferred procedure without changing anything came up with 13.8. Actually, that's not correct. I changed their profit margin because it, based on everything that I've read and so on, I thought it would be more prudent to decrease that. And I used, I think, this last one here, which is 18.9. But you could see when I do the valuation, I use the 5-year average PE, which is around 25, and the stock price, the high price is 143, and currently it's at 146. So maybe I'm being a little bit conservative. Let me put in 26 here. I don't think that's going to make much difference. Yeah, so it's, again, it's 149, so sell. And forecasted low, I just used 20% from the current price of 146. But again, you know, if you look at the this trend, this is what really is worrying me, is their earnings are dropping, and that has to do, I think, a lot with some of the risks that were mentioned.
Andy, didn't the profit margin drop because of the trade war and like the volumes were way off though? Like, wasn't it kind of a one-time thing and not like a?
No, there's been a lot of competitive pressure, Matt, so they've been reducing prices as well. Now, you know, so you're right, that was an issue, but they've been a lot of the Chinese companies are competing against them in their own backyard, which makes sense. The other thing is a lot of their customers, in order for them to sell their equipment, their customers have to have large capital budgets to improve their production lines, their production facilities, and they don't see people spending a lot of capital right now on large production line changes or equipment going forward for the next while.
And there's also a decrease in that quality line.
Yeah, that was Jay was asking about that.
Right.
Thanks. Yeah, so this blue line is the quality, and you can see it's starting to go down. It has been going down since May, it looks like, if I line that up here, but that kind of lines up with the SSG as well. If you look at this quarterly data, you could see it's, you know, it's the same thing. So I'm recommending a sell. I recommended a sell last month.
Right, I remember that. Can you go back to the graph again? So what are we looking at based on the manifest, the graph?
So this.
Where are we looking at? What is the red line? What does the red line tell us?
Red line is the projected annual return.
Okay, quality. Okay.
So the par has gone down, and I think Tom was showing a 5% par in his chart.
And the green line is price.
Okay.
Share price, I think.
So what do they recommend in that presentation of Tom, Henny? What did they say about? I remember they circle these lines, like take as consideration to sell. Look, are we looking at par, or are we looking the?
Well, I'm again, I don't. My view on this stuff is that these are all sort of nice tools to look at. So there's a calculation for quality, and you can, you know, I can make up my own calculation for quality. They make up their own whatever. But when I look at the fundamentals,
I agree with you.
And I see this drop right here.
Right.
That's really what worries me. And then I read the 10Q, and they're talking about their competition. They're talking about, you know, all this stuff. So that's really, I think, the key thing is what's happening in the market. Where does management see the company going forward? I think when these guys started, they had some very novel products. People are now copying those products, so they're losing some of their IP and competitive advantage.
And
I agree with you. Just looking at this,
Manifest is showing a 4.4% par, which is pretty low.
Yeah.
So
no, I just try to. I agree with you. What you said, everything, Henny. But I thought I just want to use this tool to help myself and help me to understand. Okay, I remember they talking about when to sell, when to buy, like when this, kind of sort of like an indicator, take a consideration to sell or to buy. So that's why I try to understand. Oops.
And you want to buy,
Uh-huh.
ideally you buy when the potential return is high,
Uh-huh.
and you sell when the potential return is low.
Okay, so right now potential return is
Ugly red
below,
line.
is it a 5%? Is that what are we looking at it? Just looking at this
Yes,
additional, this graph?
so somewhere around there, I think
Okay.
less than 5.
Okay.
I thought you wanted to sell when the red line touched the green graph. Or am I not remembering that correctly? Does that make sense? Relative return.
I don't think there's necessarily a correlation. The green graph is share price, and the other thing is relative return, or pars.
When they were showing the graph, they definitely pointed out where things intersected represented opportunities to sell, and I don't remember, but where that was.
Well, again, I think those are sort of all.
Well, with those, you want to sell when your return is not great, and the future. We need to look at the facts on the ground too, like Annie was talking about, all the market conditions. So I think maybe in the interest of time, I don't know how much more time we should spend on this. I'm pretty well convinced to move on from this and sell this one and move on.
Yes, no, I agree. But just for my personal knowledge, to look at this graph, I agree with Henny was saying this company, whatever the reason you listed, it was just convincing, very convincing. But just for my own knowledge, for other companies to look the graph,
Okay, so let me just, where did I put my agenda?
So
next.
Oh, here it is.
I think so. Tom was going to go for Jane, right?
Jane is still not.
Tom Loftus. Thomas.
Close that. Cancel. Sorry. I'm going to make somebody else a presenter here. Is Tom Loftus? Is he here?
I think so.
Just checking.
I think so.
I'm not seeing him.
Yeah, there he is. Yes,
he's here. I'm
going to unmuting.
Okay,
Tom,
I'm here.
Yeah, I'm going to make you a presenter. Oh, I don't think we can because you're not.
Oh, you can promote him. Why don't you promote him?
Okay, how do I do that?
You just, okay, where is he? Click his name. Okay, I don't see. I'm looking for him. Tom.
Yeah,
okay.
I got his name. Oh,
I'm going to make him a panelist first.
presenter.
Okay, I just did. No. Okay. All right.
Yeah, make him presenter.
Okay, there he is.
Make him a presenter. Okay. What is he presenting? Disney?
No, Canadian Solar.
Oh, Canadian Solar. Oh, okay.
I can't see anything except what Tom showed us a long time ago.
Bernard, I recommend you to log off and log on again.
Okay, I'll do. Okay, thank you.
Uh-huh.
Okay, so thanks for letting me present Canadian Solar. This is my first stock to report. Jane and I had some trouble connecting, but she definitely helped me with the SSG and with the VIX report. But I thought I'd start off. I'm not sure how familiar everybody is with Canadian Solar. Just show you a little bit from their report. So they're a solar company producing products for the residential, commercial, and industrial energy producers. They are, they're vertically integrated. They do everything from product development, for project development, you know, the green pieces or the low carbon people that are encouraging people in the community, get a committee together, get a utility interested, they get into project execution, engineering, procurement. They're in all aspects of the manufacturing. They even get into operating, whether they're pickup operating of a project they built for some, maybe a pipeline that wanted to be green. They also get into troubleshooting for a client, or actually they have two modes of operating. They sometimes buy into a project they're building, and they sometimes buy projects that people lost interest in or are not performing very well. So that's their energy business. And this is from 2013 to 2020, and I just want to use 2015 as a in 2015 they built 4,700 megawatts of generation. They had about 34 or like billion of income, or sorry, revenue, and 172 million of income. Similarly, next year they are only anticipating getting from 3,400 to 3,900. Last year they only did 3,200, but next year they hope to build 10,000 megawatts of power. So they're in a really tough business. They're just making the same money they did back in 2015. If you look at down here, and the other part of this is the red shows the modular systems that they built, and then the blue is the money they get from operating, the energy that they produce as their share of these different projects. So another issue for them is they're showing that the red is their portion of some theoretical, I guess the mix. It seems definitely a bit high for where we are in Ontario, that we wouldn't have 40% solar collectors. Not sure what jurisdiction that's from, but the
I have a very serious problem with this graph. Whoever did this graph, they're saying carbon based and nuclear. One has nothing to do with the other.
Well, I think they're just adding them together.
Yeah,
I know.
Henny is expert in nuclear, so I believe what he says. That's his field.
I agree. I'm also nuclear.
Oh.
So I've been in the power business all my life. So this, but to go on with this, what I wanted to show here was really the cost graph. Whenever they started, they had lots of interest from people giving them lots of subsidies and that, and they were, very high cost producer. Down here, they show themselves being right in with the gas cycle and wind, but most people will tell you that the wind is cheaper, and the solar is really only competitive if they have 4 hours of battery storage on their projects. So that's the sort of environment they're in. And I'll now go to the your VIX sheet.
There's a question about what do you think of the patent infringement filed by Solara Corporation? Do you know anything about that?
I didn't hear the question. Just repeat it, please.
Oh, what is your thought on the patent infringement filed by Solara Corporation?
patent infringement. This was
Yes.
on
Canadian Solar.
yeah.
Have
So
you read
they have
anything?
they have a suit against them.
I'm not quite sure. We have.
I didn't pick that up in any of the reading that I did. That
Okay.
I'm not surprised though. This is a very competitive industry. The as we've got some color in here when we go on,
Okay.
to continue the story.
Okay.
They have had all sorts of incentives to build this and to engineer the panels initially, and not only in China but in Germany, in Canada. I'm sure they did it in the States too. There was all sorts of incentives for people to do that. Now there's stiff competition. There's many in China. A lot of the companies are going private, and even the CEO tried to buy this company in 2017. He had a bid in for them at 1847 to take the company private, but the board rejected his offer. He also though owns 33% of the company. He's a professor at the University of Toronto. So if I just go on with talking about some of these other things, why wouldn't be surprised that people have there's tariffs to try and let the home companies compete. There's anti-dumping suits. There's production, and then there's production cost per watt competition from the other solar producers and then from the conventionals. And then COVID-19 is also going to impact on them because of the near-term electrical overproduction, because we don't have so many industries operating. They're starting up slow. There's going to be a lot of competition there. They haven't had all these industries offline, so there's not going to be a lot of utilities running around buying more capacity. The value line, they gave them 4 out of 5 for performance. Price stability, only 10 out of 100. Price growth persistence, only 35 out of 100. And earnings predictability, only 15 out of 100. So they're talking about CIQ as a strong pipeline of projects and carries out various acquisitions and strategies to further consolidate its position. But there's stiff competition from the cheaper alternatives, and foreign exchange and added concerns. So if I just talk about the annual report, the historical sales growth is 11, or the 10 years, and then the 5 years is only 1%. And the quarterly is 2, and then the trailing 4 quarters or the annual, they were actually down 14%. So it was projected at 8% last time, and Jane wanted to use 8% this time. The historical growth is 83%, but if you uncheck the 2 bad years, it really reduces to 12%, in line with the 5-year. And the EPS was down 38% on a quarterly basis and 27% on an annual basis, and was projected ahead at 5.2 both last time and this time.
It was an annual projection, right? It was under,
yeah.
It's okay, under quarterly right now. Okay.
So their pre-tax sales last 4 quarters 5.6, 5-year average 5.4, so it's increasing a bit. Their return on equity is declining. Their debt to capital is quite high, 63%, but it is down from 70%. And then their debt to equity is 178, down from 245, but still very high. So if you're interested in me getting, done as quickly as possible. What I've shown here is that the company itself looks like it's very competitive, but it is in a very, very competitive industry. And if you look at the profitability part of it, they're a very small, their EBITDA is very small compared to this is the S&P on the far right-hand side, S&P 500. Profit margin, again, very small compared to the S&P 500. So again, this is right out of their annual report saying that it's difficult for them to be, there's such a small part of the market and there's not a lot of other people in this, there's only very few, I think there are about 10 different companies in this power. So they're very, there's an early stage development. The future demand for solar and the power products is uncertain. The market data for the solar industry is not readily available as for more established industries. So I'm going to go on now to the SSG. Okay, we got with the recommendation as a whole with an upside down ratio of 2.7 to 1 and a projected annual PE of 5.9. So this is the SSG, and as I was saying, the growth in the past, if you take out these two, it says 88%, but if you take out these 2 years,
I just need to refresh
You
the
need to hit
screen.
F5 to refresh.
Yeah, refresh the screen.
well, so it only shows up at 12%.
Mm-hmm.
So these are the trends we talked about before. The pre-tax profit it's very small, but it's stable. The return on equity is coming down, and the debt is coming down. So as far as valuations, this 5% projection gives you 365 as a future. Use an 8 for a PE, gets you 29.2, and use the recent low of 12.2 as the low. And if I show you this here, it's just out of the buy zone, and it was up today. This price was 1681 that it was forecast at. It was up today to 1798, and after hour went up to 1859. So it would even have a lower return if you used today's prices. So in summary, I think you have like a company that's done fairly well, taken over some other competition, and but it's in a very tough market, and with all the competition and the nationalist feelings to produce things at home, I just don't see this company being a good investment. Even the fact that it's really, if you look at the front, it's really a cyclical company. It's not.
Mm-hmm.
the earnings are very cyclical.
Mhm.
I think your best, this would be a dividend company if they did pay a dividend, and they definitely don't pay a dividend, but it's not a growth company. Any questions that anybody has?
So do you think it's a reasonable hold, or given the industry conditions, we should consider selling?
I would say you should sell it. Like, it did come back, but the other thing that may get you some more color, the only thing I can think of to hold it, and it may be, if they have bad earnings, then it may be bad for you. You're just about even right now on what you paid for it. But the annual meeting's on the 28th of May.
What about now the batteries? Are batteries improving fast enough that the solar would become more useful?
Well, for yard lights and highway signs, construction signs and stuff like that. But when you're talking industrial power, you're talking like huge batteries. If you had if you're lucky enough to maybe have some pump storage around, maybe that would be a battery for you. But the batteries will probably be produced for cars and that. And there are people working on batteries, but this whole battery is a solution. I don't know that you're going to want to wait until they do produce a battery, though.
Yeah, I was involved with a project where we had, it was in the Arctic. So we had wind, solar, we had hydrogen cells for storage, some batteries. It wasn't very economical. It was for a mining company. They could run some of a very small part of their operation using wind and solar. And they did it really more as a demonstration project rather than trying to run the entire mine on that. So I agree. Like I don't think in the near future we're going to see wind and solar take displace industrial type of applications. I was in the UK last 2 years ago, and I was there for a nuclear project, and they were trying to build one, and a lot of the opposition to nuclear was out in the newspaper saying that wind prices have come down significantly, solar prices have come down significantly, and then they had a heat wave, and for 2 weeks, the solar was running, but the wind wasn't. And so I think the point is that for large scale, cities, large scale industrial operations, you need some sort of power that's going to be there on a consistent basis. And both wind and solar are very cyclical in that regard. And like you said, Tom, I think like I've been in this business myself and developing projects and so on for clients, and it's a pretty tough business. Most of these power producers are, they're on a shoestring budget, and one project can sort of make or break them. So
I have to agree with Tom. This is not a growth company, and I don't remember how this company come up to us, and maybe we want to study the utility. I don't remember.
You don't remember because you weren't at this meeting.
I was in the meeting, but
you
I forgot
were
why.
away
Maybe it was a
you
small
were
company.
away. If you had been in the meeting, I don't know if we would have bought it, Jay. You
No,
weren't. You were
because
away.
I remember somebody presented. I hesitated to. I was going to follow this company to study, and then when I was before I handed to Jane, I remember the last 5 years of earning was negative when I was analyzing the company. I said, why, you know? And another thing that Tom pointed out, this company did not pay dividend. If it's paying dividend like Algonquin, maybe okay, but yeah. And the third thing that Hanny, you said at the beginning of the meeting about the market, the condition, all that. If it's that competitive and it's not going to be a growth company, I also think we should consider to sell.
Yeah, I mean, I think there's much larger players that can bring you know, a lot of resources to the market. So if we're looking at buying the best in a particular market, I wouldn't classify these guys as one of the best in their industry.
Yeah, the last 5 years, their sales is only like a 1%, and the earnings is like a negative. Oh, sorry, 1%. The forecast, I don't. Oh wait, no, yeah, the sales is only like a 1% last 5 years. So I think because that's significantly low historical. Just looking at historical data, the 10% that Tom is showing is took out the 2010, 11, 12. Actually,
Yeah,
if you look the last 5 years, it's very low actually.
yeah.
But anyway, okay, all right.
All right.
Well, thank you, Tom.
So
Okay,
thanks
thank
very
you.
much, Tom.
Yeah.
So
All
let
right, I
me
think it's me now, Haney. I was going to do Disney really quick.
Okay.
Sure. All right. I'll make you
Very
a
brief.
presenter.
Yes. All right. Okay, everybody can see that? Maybe too small.
Yeah, a little bit too small.
It's small.
Okay,
Here, let me zoom in 1 second.
it's better. Oops. Okay.
No better.
Yeah.
Okay, so I guess just on Disney, I'll go really quick. We've got 9 left and 45 minutes to go, so 5 minutes a person, just time check for everybody. So I plugged in 15% sales and earnings growth for Disney because what else do we have to go on since they're mostly closed at this point? So with that, that's what I plugged in. And it gives us these upside downside ratio and relative PE, so 2.2 to 1 and then 0.4 to 1. And it's compound annual return of 0%. So I guess, Andy, that's what you were like, well, wouldn't we just sell this at this point, right? Which I think is a fair point to be made. Let me just flip over to the SSG real quick. I guess other positive news from Disney was they're pretty well on track for their streaming targets, which they had a big, catalyst helping them with that. Unfortunately, the other 85% of their business is not doing well. So if you look at SSG with the 15% for the sales and earnings growth, a little bit more. This is just basically to me, and I did it from the quarter, right? So Q2 2020 is the most recent quarter. I chose that to start the projection from instead of the trend, because when you do the trend, it assumes they're going to bounce right back to the sales levels before the coronavirus. So I said, all right, well, from the quarter, if we start from this most recent quarter and they can do 15% on average for the next 5 years, that's essentially what we got modeled in there. But that is, again, only matching what they've done in the recent past. So given how far the drop has been, maybe 15% is a little low, but I kind of just started there from our, base kind of assumption. So with that, it gives us a pretty low buy zone. It's in the hold up to 109, which it was just barely in. And then today it actually went up to 117, so it's in the sell zone. So if people wanted to make a motion to sell Disney, I wouldn't be upset about it. I guess the only thing why I didn't is, I don't know what it's going to look like when things open up again. I mean, you've seen some news reports on they sold out all of the Chyna park and the Shanghai Disney when they opened it back up. But then you hear the next report was that they only made it 25% capacity. So I think it's just a little too early to tell, especially when sports are out and when sports come back and, how much do they make off of that? It's tough to say. It's 15% earnings growth too high or too low. So that's the main reason I put a hold on it. But you know, at $117, I probably wouldn't be too sad if anybody wanted to sell it. But that would still be at a loss. I think most of our purchase prices have been around $130. If I don't have it up here, or no, I do. Here it is. That's Air Lease. So here's Disney. Yeah, we bought Disney at what, 113 and 133. So at 117, we would have made probably broke even. But anyhow, that's my presentation. Any questions or discussion?
Matt, you mentioned earlier, I think last time or the last time you presented Disney, you were talking about the streaming business and how much that contributed. And I think at that time you said that it really doesn't contribute very much to the overall. Is that?
No, not at all. Yeah, so they don't expect it to even make money until next year.
Okay.
So even though they're adding like 50 million people, so at the end of March, these were the targets. So they said they wanted 60 to 90 million Disney Plus, and they were at 33 and a half. They've since said they're up at like closer to 50 million, I think, on Disney Plus. Hulu, they said they wanted 40 to 60, and they're at 32, so they're almost right there. And then ESPN Plus, they wanted 8 to 12, and they're at 7.9, so they're almost there for ESPN. So they're on track for sure. But even with that, they've invested so much in advertising and just like, you know, building servers and content and all this kind of stuff that, yeah, they're not even going to make money till next year, or anticipating.
I don't know a lot about Hulu because we don't have Hulu in Canada. But Disney Plus, I mean, one thing that worries me about Disney Plus is the content. So I've been watching it for a bit, and most of the content is just recycled. So if they're going to want to compete with Netflix, they're going to have to pay quite a bit to develop new content. And so I'm not sure how that's going to impact their bottom line for Disney Plus by itself, and where
they're releasing Hamilton in July.
I think Disney Plus they have a reservoir of movies that kids can watch over and over and over and over and over again. It might be better for parents just to get subscribed to Disney Plus and let them watch the movies over and over and over again and buy all of them or rent all of them individually or whatever they want to do. It'd be easier to do Disney Plus.
Yeah, and I think the thing that they're trying to do, like marketing wise, is by bundling them all together and making them cheaper, like individually when you buy all three together, is that they're speculating. A lot of people are like, okay, I watch everything on Netflix, so I'm going to drop Netflix. I'm going to pick up, I don't know, some other one. I don't even know what there is. Pick up Apple TV, and then, okay, I'm going to drop Apple TV. But then they have Disney, Hulu, and ESPN, since it's kind of like different people watching each network, it's harder to drop it. So I think that's like an advantage they have in the streaming wars for sure.
Now, one thing though, I noticed that Netflix has the lowest drop rate of any of the competitors. It's about 7% a year. Most of the services have higher drop rates than Netflix.
That could be. Or I mean, better case, even better scenario is nobody drops any of them and everybody buys all of them. So I would take that too. But again, I don't know. I mean, who's to say once everybody's not locked in their houses, do all the subscribers go away? I mean, it's so murky for Disney right now. I mean, their business, I mean, sports are hurting, cruises are out, travel's out, parks are closed. You know, it's like the worst possible scenario for them.
But everything's going to come back eventually.
I hope so. I hope you're right. I guess I think you're right. I think you're right, Bernard. But I don't know.
And we don't know, right?
So yeah, I mean, that's why I said a hold. I think long term, yeah, Disney is going to be, you know, their movies are going to be around forever, especially with the streaming. They're kind of look towards the future. But short term is, you know, I'm pretty surprised to see the price as high as it is, honestly. All right, well, that's it. That's my presentation. So,
okay.
Matt, do you want to just continue to present Air Lease with John? thinks it's recommended to buy us?
Yeah, I'll just do it. I think John had to leave, but we talked over the weekend. So here is Air Lease. I'll be quick on this one too. So the last SSG, okay, so Air Lease, I guess just real quick for everybody that forgets, they rent airplanes primarily to, just your normal commercial airlines. So like Delta, American, but they do primarily outside the US. So only 5% of the planes that they lease are even inside the United States. And then these airlines will just kind of use their planes to fill in their fleet here and there. So last SSG, we had 14% sales and 9.5% earnings growth. And what John and I discussed was like, let's just plug in zero because we're really not sure, like airlines might go bankrupt. We have, again, no idea, right? Because all the bailouts are still happening. There's a lot of moving parts. So we said, let's just make it simple. 5 years from now, if I look at the SSG for Air Lease, do we think that they can make as much sales and earnings as they did today or last year, basically, right? So will the airline industry have recovered enough for that to make sense? And when you plug in 0%, even though, starting to see negative already. So basically go negative and then slowly build their way back over 5 years. It results in upside downside ratio of 3.3 to 1. Oh, sorry, this wasn't updated. It's a higher compound return than 7.7, I suppose it is, which it says up here. So 7.7% return. So when you do that, let me just flip over here really quick. Basically, it says our sales is going to be exactly flat. So we're probably going to see a drop down here and then like a slow build back. Trying to imagine something like that. This kind of V or U or check mark or swoosh shape, whatever you want to call it. So we said that's kind of our base scenario, and it gets us pretty positive. It puts it in the buy range. At least it was before it closed today. I think it closed at like 26 or something like that, maybe 27. So at 22 is definitely in the buy range though, 3.5 to 1. And then we kind of said, well, 0% sales. If there's any upside, if they end up having higher sales and earnings than they had this most recent year, then that would be really good for us, right? We do even better than that 3.5. So that's kind of like the big picture, I guess, is like if they can at least get back to where they were last year, Air Lease is probably a decent buy. But here's some of the recent developments from their 10Q. So they had an 86% collection rate in April, which was down from 90% in Q1, which is about normal. But they expected it to go down, as everyone stopped traveling. I think airline travel is down 95% in the US from what it was like in January. So 86% collection rate is actually pretty good considering that. I guess the other thing they really wanted to point out is they have 108 different airlines that they work with, and 75% of those have some form of governmental ownership. So they think likelihood of getting paid is pretty high. No single customer, so it's not like they're all Delta or all American, makes up more than 1%. So they've kind of diversified that risk away. Another thing they're doing to kind of like help their earning is reducing the number of planes for sale. So as they anticipate plane prices dropping because airlines go out of business, that means more planes will be for sale, so the prices will drop. So they don't have to sell, I think is kind of the main point. They have a pretty good balance sheet and plenty of cash, so they're not going to be forced to offload any planes, that they don't want to. Another thing is flights in China, they reported have returned to 70% of what they were in January. So it's a pretty good rebound considering what's happened. Again, $6 billion in cash on the balance sheet. That would fund them for a couple of years at least. And then some other positives for them were that the 737 MAX is delayed. So originally that was a negative because they were going to make a lot of money off of it. But now that it's delayed, they actually might be able to push off some of those contracts and not have to spend cash. this was just an interesting point I found, that the International Air Transport Association expects passenger traffic to be down 48% in 2020 versus 2019. That's just seems astounding to me. So yeah, I guess this was 6 out of the 300 aircraft that they have are involved with companies that have gone into bankruptcy. So they're working through those. And then some interesting ones were they anticipate is airlines try to conserve cash. They won't buy as many planes either, but Air Lease has a lot of newer planes. So they think that there might be more demand for their planes, you know, as they have some of these more fuel efficient ones that airlines are sometimes being forced to use in certain countries. Let's see this. Oh, and they also think that in order to save cash, airlines will decrease the amount of planes that they own. So they might actually start renting or leasing planes even more in the future, which would definitely be a positive for Air Lease. But the big question, I guess, for them is, you know, like I was talking about the price of planes declining, as the prices of planes drop, they'll have to write down the value of the planes that they have on their books, which will cause, you know, big negative earnings in future quarters. So that's pretty unknown right now, is like how much they're going to have to write down the value of those planes. And then it, you know, could potentially hurt their balance sheet. You know, their credit could get downgraded, and they could have higher interest rate expenses. But I don't think that's that big of a concern, given how much cash they have, and they can cover their interest costs pretty well. So I don't think they're in that much danger. So yeah, that's the overview of Air Lease. John wanted to do a hold. I pushed him into a buy, and I was going to buy it this morning, and I woke up too late. It was already up 15%, so then I stopped. But anyway, that's my report on Air Lease, or our report. Any questions?
So one more time, is that buy, sell, or hold? What do you think?
I think it's, I have to run it with the new numbers that aren't even updated yet, but I wouldn't be afraid to buy it, even at 26. I like it better at 22.
I think those are really two good reports, Matt.
Thanks.
My only comment would be, what do you think about another crash? I mean, the market is back to where essentially it was. Are we going to see another dip before we hit bottom? And
I wish I knew.
So
I don't know if I'd be in this meeting if I knew the answer to that. But I mean, as far as Air Lease, they're still down in half of where they were. So I think that, you know, maybe we should. I don't know. The only question in my mind still that's causing me to not buy even more faster is, are the rental planes kind of like the last planes that airlines will look to use? So like, even though air travel is down 50%, does their demand drop, you know, 90%? Because it's only that, you know, if you have 100 planes, you're only using Air Lease for your 100th plane, not the first 99. Or are they just always used? And that's kind of the big question that I have of
yeah, I think when we first presented this company, I can't remember who did, but there, you know, I think that some airlines were a significant portion of their fleet was leased because they didn't have to carry that on their balance sheets.
Yeah, definitely. Like, and they talk a lot about the low cost carriers. So like Spirit Airlines or somebody like that, they primarily lease, I think.
There's a question for you, Matt. Are you worried about interest coverage being less than 5 times or 5%? I don't know, 5x. They carry a significant amount of debt.
Yeah, the interest coverage ratio. So I was kind of looking at that, and this is their income statement. So you see here, in the last quarter, they did about 500 million in rental revenue. That's pretty much all of it. And their interest expense was about 107 million. You can see here. So say if this number dropped in half to about 250 million. Their only other real expense other than this interest is their G&A right here, which is about 28 million. I'm saying, yeah, 28 million. So total costs, like fixed costs, are only about 135 million. And even if this dropped to 250, you know, they would be negative earnings, but this is depreciation, right? It's not an actual cash expense. So they'd be able to cover the interest. Now, does that trigger like some sort of a covenant in some loans? Maybe. You know, I haven't read all the legal work around that, but I'm not too concerned. So, I mean, even if the revenue drops in half, which seems dramatic, I think they should be able to cover it pretty well.
Okay.
This may sound really far out, and it is, but you know, with the Green New Deal and stuff, I heard an airplane executive the other day talking about how his airline uses 4 million gallons of fuel a year. 4 million gallons a year, fuel a year. There may someday come political pressure for the airlines not to use so much fuel. I don't know, but that's something that's really possible.
Yeah, and that's why they're so excited about the 737 MAX, Bernard, because I think I remember, and maybe somebody else remembers better, but I believe for a comparable, the MAX 737 versus like the normal 737 is about 30% less fuel, if I remember right. So that's why they're like really excited to get those out there, because the cost would drop pretty dramatically to operate.
Regardless of all that, I just hope that they have fuel when I'm flying in them. Because I'd hate to.
Well, yeah.
But you know, seriously, I don't think, you know. So there may be political pressure to use less fuel, but I think the technology has to be available. So if the MAX comes back online and it's using less fuel, then yeah, that would be a game changer. But these guys, you said, have already orders in for the MAX. So
Yeah.
if that comes back, then they're in good shape. But
yeah, I think they could be in good shape, but it's going to be, I mean, you got to put your big person pants on to deal with what's going to happen over the next year with this company, I think.
I guess my main concern about you know, the market in general is just we don't know what's going to happen with all of this unemployment. Are people going to be hired back or not? And that's going to impact a lot of industries, you know. Like I just, from a personal perspective, I've been, you know, locked up at home for a couple of months now, and you know, I haven't gone to Starbucks to get a coffee or, you know, what have you. So
what about Tim Hortons then?
Tim Hortons, my spending has, you know, gone down significantly, and I think if people catch on to that, there may be a very different paradigm going forward.
Yeah. The other thing that I saw, just unrelated to this, in the news over the weekend was they're talking about, you know, social distancing planes and things like that. So, I mean, this seems like a positive for Air Lease, that if you can only, you know, fill your planes 50% full, you're going to need more planes to, you know, move the same number of people that you did before, right? So could potentially be a positive.
But then the airlines will charge more money, and that'll probably drive down demand to an extent. So
yeah, I mean, that's like the airline problem unless Air Lease. So I don't know. Again, I have no idea how this is all going to shake out.
But maybe the airlines are buying futures and gas now while it's low, so their fuel prices will be lower to compensate for the low passengers.
Yeah, I mean, I think at this point, like, they're down 95%. They'll take whatever they can get.
Matt, I have a question about using the 0% 5-year growth.
Okay.
I thought when we did a stock study, we erred on the side of being conservative, but that once we held the stock, we weren't as conservative. We were probably more optimistic. So 0 seems super cautious. I mean, like way on the side of being pessimistic.
enjoying. I think Matt has a point to why he put in 0 in the under this condition right now, uncertainty. He just saying that even if we just give 0% forecast, like next 5 years they don't have any growth, still can give. What's the return? Was it 13%? Matt, what was it?
Average was 8.
Average, yeah, going down a little bit.
16.
I just don't think that it seems realistic that they would have, it would be absolutely 0.
Right, but I think he just make this assumption, I think, because it's
Yeah,
not
I was
really,
kind of
he
like,
couldn't project,
okay,
yeah,
if it's a buy, it's 0. If we think
Right.
there's actually going to be 5, then it's definitely going to buy it, right? So, but again,
I don't think that's outside the realm of a possibility, because like next quarter or next year you could see a huge drop in their revenue, and then they would have to come make that up, and they'd have to grow it at some sort of much higher rate to get back to where they are now. So I think that's a pretty reasonable assumption, actually, if you think that the revenue is going to drop significantly in the next few quarters.
right. I know there's some people that think the airline industry will just never ever be the same. So
I'm not sure if that's true. For example, if everything back to normal, I would like to fly out, right? If we go to Europe, we have to fly, I go China
Right.
every year. So we're just waiting for this, yeah.
yeah, I mean, it's going to be a rough 12 months.
I think the issue
just too many unknowns. We just
Too many unknowns, yeah.
just don't know.
It's
that's why you
medicine
buy
of
stock,
time.
right? High risk, high reward. Yeah.
Right.
But the the main concern, really, like people have been saying, the air in an airplane is recirculated, and I've been given a very detailed lesson about how the coronavirus gets transmitted from my daughter, and really it has to do with droplets falling on you, and then you touch you touch your face or your eyes or your nose or what have you, and so I think if I don't think this air circulation is going to be an issue, but I think how do you distance in a plane, and if they can do that, or they can force people to wear masks so to reduce the risk of droplets, I think it becomes a lot more easier to travel, or more palatable, I guess.
I think we're running out of time here.
Yeah.
Okay.
So with that, Tom, did you want to present? You had both holds, so I know we don't have to present holds.
Well,
we run out of time.
I can do a little bit here. I'm
Okay.
reconsidering about maybe selling Skyworks. Yeah, this Lam Research doesn't have a whole lot of upside according to my projections here. Their sales growth is down. They've so anyway, they've missed their guidance. Sales growth is down. One positive is that there's Taiwan Semiconductor is planning to open a huge plant in Arizona, and so they might be able to sell a lot of equipment there. But that Foxconn plant never got built, so we'll have to see. So I guess I'll recommend a hold on this one for right now, unless there's any questions.
Well, I saw a report the other day on this Taiwan Semiconductor. It was highly recommended by Tim in Hot Fast Money, but I don't. Go ahead. I don't know for sure nothing, but I heard about Taiwan Semiconductor might be okay.
Well, but we're not buying them. I'm saying that
I know, but
they would buy equipment.
Works dealing with them might be fine.
Yeah,
Wait,
well, they're
Taiwan
one of
Semiconductor is their customer, right?
it's
lab
one of their
research
major
customer,
customers. Yes,
which is good.
Samsung, Taiwan
Yeah.
Semiconductor. Who else? Intel. You know, they sell to the big chip makers. Micron.
Mm-hmm.
So anyway, I'll switch over here to Skyworks, and you know, I'm been reconsidering Skyworks. You know, it's not at its 52-week high, but you know, Manifest is showing a pretty low. Let's so this
PAR.
is
Yeah, I'm curious to
par.
see.
Let's see. This is go back. Oh, wait a minute,
Yeah, you just
Skyworks.
had it, the first one. There you go.
Tom, does Skyworks have anything to do with 5G?
Yes.
They do sell. I sent out some information on 5G. Barron's has an article. They are going to be selling um, more expensive chips, at least when these 5G cell phones come out, and also for the network. So that's going to be like a boost to sales. But you know, we don't know what the uptake's going to be on that. It's, you know, according to this article in Barron's, it might not be super fast. It might be a little slow, and they have a certain amount of competition from Qualcomm in that market. Qualcomm has the 5G modems sewed up for Apple for the near term. So which, you know, every phone needs one of those. So you know, and then all this Internet of Things and stuff like that. You know, I mean, I think 5G will be somewhat of a driver, but and you know, the networks aren't built out yet. You know, in order to take advantage of those things, you need to have a network. You can have a device, but if you don't have a network you can use it on, and the stations need to be really close together. And like they say, the best use is like in stadium or something like that, where you can get. But you know, I mean, how many people are just going to have a special phone to use in stadiums? You know, so I don't know. But anyway, here's Manifest take on Skyworks. You know, the quality is coming down. The the potential return is down, and I guess the price. I don't know. They have been higher, but you know, they're up a little bit today, as are most stocks. See my. I don't know if I got my my SSG. I didn't, you know, I didn't know what to do as far as the projecting the sales. It's I guess Skyworks is the one that's been impacted by Huawei. Huawei was one of their big customers, and they represent, well, sales are down because I guess maybe about 10% of their sales used to go to Huawei, but sales would be up 4% if you ignore what happened to Huawei. Let's see here. So their Q3 guidance is revenue is going to be down 10%, EPS down 16% due to the COVID-19 and Huawei sales ban. Profit margin is decreased. They had to close their Mexicali plant for a couple of weeks, but it's back open. They're still buying shares back, and they have a small dividend that they're paying. Their sales, the majority of the sales are to the U.S. but they also have, which, confuses me, because, I think that a lot of those go into those chips go into cell phones, and we aren't making any cell phones here. They're being made in Asia. So I don't know quite. That's what, this is the info they gave, but I don't understand it.
What do you
Maybe
mean?
it's
What do you mean,
the
Tom?
network. Maybe
Pardon
it's
me?
the network chips that are in the States.
I guess it could be. Apple's their biggest customer. Apple supposedly represents about 51% of their sales, and Apple phones aren't made here. They're made in Asia. So,
But they could be sourcing the chips,
The components,
from
yeah.
them and then assembling in Asia.
Right.
well, right, but that's okay. So, yeah. So, I mean, why wouldn't those sales say so? They would record those sales as going to Apple rather than going to Foxconn. So, I don't know. But anyway, that's the info I have, but it's confusing. So, and of course, they have a risk, with Apple being their largest customer. If they lose Apple's business, that could really impact them. And they have, they sell their Apple and Samsung are the huge customers. And so, I mean, so those companies have like pricing pressure. They can, drive a hard bargain. But, as I said, they're developing 5G phones, but the networks are not generally available. And so I don't know, how rich people are. It's kind of, to me, 5G phone to be kind of like a luxury item unless you, right now. And I don't know how rich people are going to be feeling with a recession because, we're definitely in a recession. And they're making notable gains. They had this is called bulk acoustic wave chips, which I don't really know what that is, but that was a weak area. They are doing better there. So, I would, I think I would recommend we sell it and try to find something with a better return. But, I mean, that's, who knows what's good to buy at this point.
Okay.
So,
Any questions?
Are we going to have time to vote?
So I guess we can move on unless.
Yeah, we got 20 minutes left. Is there anybody that absolutely wanted to present that hasn't yet? So we've got Facebook, Schwab, Algonquin Power, Comcast, and FleetCor.
Or any of them buy or sell? Oh, okay. Mine was a hold.
FleetCor is in buy, but I recommend a hold. I have been thinking if we should buy more. I don't know. I cannot make that decision.
Well,
Yeah, I wanted to talk a little bit about Comcast.
Okay, let's discuss Comcast then. Go
Maybe
ahead, Bernard.
somebody could bring it up.
Okay.
I sent the files. Joanne helped me put the files up.
Okay, all right. I will.
Bernard, can you see the screen now, or are you?
I think he's on the phone right now.
I have it if you want to.
Well, no, I can't, Haney. Damn it. It's all screwed up here. I don't.
That's
I tried to.
Yeah.
Oh, here it. Oh, it came for a minute and then it went away. They tell me to put in my audio. Oh, here it is. Virtual Club of Sacramento. I can see now. Thank you.
Joanne's presenting.
Okay.
Go ahead, Bernard. I have.
Okay. Well, there's about 3. So for Comcast, it's going to be down maybe 2, 3, maybe even 4 quarters. It's hurting a little bit because of COVID-19. They had to install safety into their workplace for their customers and for their workers. But they're expecting to come back. there's 2 or 3 things that are positive. You know, they're launching a new streaming service in July, Peacock, and they have 3 levels. Peacock, it's free with advertising, or you can pay like $5 a month for quite a bit, or you can get the deluxe version. I don't know the price of the deluxe version, but the streaming product may add to their revenue. I've looked at them for the last 5 or 6 years. They're growing about 9%. I mean, the compound annual growth rate. Plus, I saw some when I go to Amazon. Yahoo Finance. I see there's some insider. Well, there's about 3% insider ownership, but there is insider buying in the last 6 months. Bunch, but there's some, and a lot of companies have been cutting their dividends or eliminating it. Comcast is raising the dividends again, the quarterly dividends from 21 to 23 cents. So I think actually when I did SSG, it come out a buy, but I think we'll keep it at a hold because I think we're trying to find smaller companies. And the expected return is like 8 to 10%, which we might do better. I don't know. So, but it's a hold. But anyhow, I think it's a good hold in my opinion. So, any questions? I'm waiting. They're supposed to have an annual report. I actually own it, and I called them. They said, "Well, you'll get your annual report in May," but it still hasn't come. Then I could read it and know more about the company. But anyhow, questions I'll try to answer them. Yes.
Why did revenues fall? You said something about security?
I went through, by the way, it's a hard company in a way because like the 10Q was 144 pages. And then they had 2 or 3 reports in addition to the 10Q. But the only thing I skimmed through as best I could, the only thing I could find reasons for the declines was COVID-19. I couldn't find anything else where they explain the drop in sales and earnings, temporary. But they seem to feel that the earnings and sales will come back. That's the way I see.
Is it because they cover live events mostly, or I don't understand why it seems like more people would be using Comcast because of COVID?
Well, because more people are staying at home and they watch television.
Right.
So the advertising goes on.
Right.
Let's see, I hope I'm answering your question. The live events are hurt, and the sports has hurt them a lot because they were pretty big on sports.
Okay,
yeah, I think the Olympics. Don't they have the Olympics?
Yes, and that's been postponed. But
and they own some theme parks.
Yes.
That are closed.
And I think they've been closed for a while.
Yeah.
So I think it's all the shortcomings are linked, as far as I could see, to COVID-19. And they're still paying. They're trying to pay down their debt. And they're raising their dividend, and they're expecting. Well, I'm expecting that with the political campaigns, this is the largest broadcasting company in the world, the Comcast, NBC, CNBC, MSNBC, a lot of channels, Oxygen, a lot of channels and programs, and even when people stay at home, they might watch TV, and there'll be streaming. As I say, they're introducing their Peacock, their streaming product, in July. We don't know how that'll do for sure, but
Bernard, are you aware of a lawsuit that NBC is facing from the Smile Direct Club? I think it is.
I'm not aware of that, Haney. No.
Okay. I was reading something about that somewhere. I think it was like quite $2 billion or $3 billion that they're suing them for reputational damage or something like that.
Wow, I didn't know anything. They're suing NBC for reputational damage. Who's suing them? Who'd you say was?
It's a company called Smile Direct Club.
Smile Direct. Oh, I don't know anything about that.
I think they, I don't know, they do dentures or something like that, and
teeth straightening.
Teeth straightening, yeah.
No,
There was some negative comments about them on NBC, and I think they decided to sue, but I don't know if that's the main reason why their earnings went down. They've been going down for a while, I think.
Yeah.
For a few months, anyways.
Yeah, a few months, right.
Yep.
But as far as what I couldn't find any serious weaknesses in Sky or Comcast or NBC but they have stumbled and they expect to stumble for 2 or 3 quarters. And they started stumbling fourth quarter of 2019. But as I read it, they're expecting things will come back. And even now, people are watching a lot of TV. Their revenue is not disappearing entirely. Okay. I would say it's old.
Okay. Fair enough. So I don't know. Do we want to present any other companies, or should we vote?
I think
we should vote.
At this point.
I agree.
Because of time, yeah.
Yeah. Okay. So let me go to iClub, and just give me 1 second. And does anyone want to make a motion?
I move we sell IPGP.
I second. So I'll put that in. Add new motion.
Open for discussion.
Oh, sorry. Yes. No discussion, Jay. We're
No
just
discussion.
moving on. No, go
that
ahead.
works too.
I'll just,
No,
while
that
I
that
write.
works too. Yeah.
So sell IPGP. Okay. And discussion. No discussion.
Okay.
Now,
Okay.
will it show up? I'm on voting, and
I haven't sent it yet.
Oh, okay.
I'm just typing.
Okay.
Yes, no, I remember. 1 person per vote, simple majority. Okay, you should be getting an email.
Okay.
But you can also log into my iClub and vote online.
Okay. Yeah, I think logging iClub is easier.
It's easier.
Are we
yeah.
selling all of it or some of it?
Oh, good question.
All of it.
100%.
100%.
Okay.
And any special reasons where we're selling it? Okay. I'm getting it. I'm getting my iClub. Oh boy.
The main reason is it's owned by Russians, Bernard.
Okay, it passed.
Poor future prospects.
Okay, so I'm on here, club calendar.
Oh, I have a.
It already passed. It's done. There's no
It's
permission
passed.
anymore.
Okay, passed.
Passed.
Okay, any other motions?
I
What
move
was the other one?
I move we sell Skyworks.
Okay, I also second. Discussion.
Well, this, as I've seen, is or maybe it's changed, but it's a really good opportunity for the Internet of Things and for 5G. I remember Roy talked to me about it.
But
Roy's a perennial bull on Skyworks.
Hey, John,
It's his
I want to.
favorite stock.
Yeah, that's his favorite stock. Yeah, John, I want to hear you. What do you think about Skyworks? Because John has been studying about next generation technology companies.
I have no comment right now. I don't know much right now about 5G. I want to look into 5G, but and the potential there, but I don't have anything to add at this moment.
So you
Sorry.
okay? You're not familiar with the Skyworks, you're saying?
Correct. Yeah, I'm not.
So what's the next generation thing?
Well, we can discuss that later, but let's get to the voting first.
I want to know if this is going to impact
I can
Skyworks.
talk to you about next generation stuff
No,
ad
okay.
nauseum. So,
What technology?
yeah.
Yeah, I just feel like the case to buy it was 5G, which is why we bought it originally. And 5G hasn't even rolled out yet, and we're already ready to sell it. So.
Mm-hmm. Yeah.
Yeah, but it's no, but I don't think that was the reason. I think Tom presented the fact that it was dropping, performance was dropping, and there may be some other. What was the other one, Tom? The competitor.
Well, Qualcomm is
Qualcomm.
pretty strong competitor.
Qualcomm. So we might want to look into Qualcomm. That might be I mean, I agree. 5G would be a good thing to get into if we get in early enough. But I'm not sure these guys, given their performance. But
yeah, I don't know. I mean, it just seems like is 5G even? How many cities are we in the U.S. right now?
When I bought Skyworks, Qualcomm did not do well. That's why I bought Skyworks. That was like, I don't know, several years ago.
well, I voted no on
Maybe
Skyworks.
we had a competitor.
Mm-hmm.
Oops.
Okay.
I didn't realize the vote's out. I didn't realize you sent the vote. Sorry.
Yeah.
I did.
Did it pass?
I was fast on the trigger.
I never saw it.
Oh,
Yeah,
you just reload your iClub. It will be there. Motion number 31.
Yeah, it's
Oh, I need to click on current motions.
Yes.
Okay.
Or you can't. F5.
I think we've. What was Canadian Solar?
Oh yeah. Well, let's finish this one and then we'll go to Canadian.
The pass?
we had two motions. One was Skyworks, and the other one, what was the first one? I forget.
IPGP.
They both passed.
IPGP passed. What about
I never got a
this one?
chance to
Passed?
vote on the first one. Well, I wanted to vote yes.
Okay.
Skyworks vote no.
What's number 31? Number 31 is passed. Okay, 6 yes, 3 no. Okay, pass. Okay, go ahead. Any other motion?
Okay, passed, you said?
Yes,
I move we sell Canadian Solar.
I second.
I second.
Oh, Jay got in there first.
Was that? Sorry. Jay? Okay, sorry, I didn't know who it was. I didn't know if it was Megumi or Jay, so I'll put Jay.
I thought it was Jay.
Sell. I think it should be Megumi though, because
I was all bye.
Yeah, she doesn't say anything.
Oh yeah, Megumi actually wants by 5. She sent an email out. I was wondering if we should quickly take a look if we have time.
Like $85.
Not just about the price of Megumi.
Yeah.
We wanna, right? It's the
yeah.
What? Yeah. Well,
But we should finish this.
Yeah.
Okay. So I sent out Canadian Solar.
Yeah. You did. Okay.
Okay. Yeah. Okay. We have a lot of money. Can we buy some?
Definitely, but we need to do a stock study.
No, based on today's
No,
what I was already presented.
No. We didn't present anything today, did we?
Air lease.
Air lease.
And Disney.
Yeah, air lease.
Oh, Disney's a hold, I guess. Actually,
No, I don't think we should buy anything today.
For 5 closed at 94.54 today.
Oh,
Hanny, why do you think we shouldn't buy anything?
Because we haven't done a thorough analysis of the market post COVID-19. So I think we need to look at each of these businesses and see how they're going to fare out in the next couple of years, and really look at that carefully before we make any decision to buy.
did the motion pass for Canadian Solar?
Well,
What does that mean exactly? What is the practical steps we're going to take to do that, though? You know.
Okay, I will answer that in a second. Let me just check on Canadian Solar.
I try to vote no on Canadian Solar, but I don't know if some reason things come up pretty slow. I guess my internet. I want to register a no vote on Canadian Solar.
Okay,
the first one mentioned, Haney, I'll say yes.
It's already passed, Bernard.
The first two have already passed. We're dealing with Canadian Solar now.
So I have 6 yes and 2 no.
Oh, which one?
For Canadian Solar.
Oh.
But it doesn't say that it passed.
Yeah, because it's the old.
6 and 2.
Should say that it passed. It's weird.
It should be sounds majority to me.
Yeah.
Oh, are you Kenny Bernard?
Well, I vote against. I would keep Canadian Solar. I want to study it a little more, but
it went through. It went through.
It passed, Penny.
Oh,
if you refresh your screen, yeah.
Oh, maybe I did. Okay.
Okay.
All right. So, John, you were asking what steps would we take? So, I would be looking. It depends on what the company is. So, say Disney, for example, I'd look at, if look at the theme parks, so that they have around the world. If you had the same revenue coming as, say, in China, 25%, and then you look at the streaming service, you look at the Disney cruises, and do an assessment of where that revenue might end up, do some sort of sensitivity analysis, and then you can see, where it's going to end up in the next few years, and then based on that, you get a sense of, what's the return, and then compare that to, say, some of the sectors that are taking off. There's a lot of small, high growth companies that are into video conferencing. There's a lot of healthcare companies that are starting to take off. These gene therapy companies, and then where's the best place to put our money based on those industries and sectors.
Yeah, that's great. That's great. That's great stuff. But I'm just saying, like, what are we going to do? Who's going to do that? Who's going to research that? And what teams or whatever you want to call it? What's the process? Not so much the process of actually doing it. You know what I mean? I'm not trying to say like I'm not trying to ask about how the different ratios and formats and formulas we're going to use, but just like how are we going to actually do it? Because we talked about it for a couple of months now.
We have a number of, like, we have a lot of money, so I think we need to do some stock studies, identify a couple of sectors that we think are going to do well going forward, and then start screening out companies in those sectors, and have small groups, each group looking at a different sector, and then we can come forward with studies, and then make a decision comparing one versus the other, kind of thing.
Okay, yeah, that sounds great.
And the computer security is another growth area.
I know something about that. I would like to look at that.
We haven't studied that area, by the way, John. We looked to security. We just did not find anything at the time. We did not find anything promising. So, I kind of agree with what you said, but I also felt. Yeah, go ahead.
Sorry, I think like computer security, I think has been a pretty hot topic these days because of the amount of information that's being exchanged online. And there's been a number of companies that are at the forefront of ensuring that privacy and information is not hacked. So I think that's an area we should maybe look at again, because it's.
I don't think we've looked at it yet.
We did.
But,
well, at least Tom and I, the past 2 hours, we have looked at security just at the time.
Those are hot areas, but it's just my impression. I haven't looked at them, but it's just my impression that things like that are, like companies like Zoom and, these security companies, they'll just be priced really high. They won't have any earnings, or they'll have sky high PEs. They won't be
That's what I've seen as well.
BI type stocks. But we can look, but that's just my guess.
Well,
no, I think that's a very valid point, but at the same time, like, I think we need to look at sort of two different baskets. So you have the traditional BI type of companies, and we're looking at undervalued companies and so on. And then you have these high growth companies that are just, you may never buy them at a reasonable sort of BI type of price. But that doesn't mean that they're not going to keep going up, because they have some innovation that's changing the market. And Tesla is a prime example of that. I wanted to buy Tesla at 300, and I said, nah, it's too expensive. And now it's sitting at close to 800 or more.
Actually, Amazon is an example, typical example.
And Amazon is another one, right?
Yeah.
So I think we have to differentiate between those two baskets, I think. And there's different ways to analyze those high growth companies that maybe doesn't necessarily drive with better investing. So
yeah. How about electronic payment systems?
Yeah, that's another one.
Yeah. I use it all the time and everything. Yeah.
So it only has one quarterly report, apparently, as far as I can tell from this spreadsheet that's on our shared drive. Maybe we could do something substantial next month, between now and then, or at that meeting or something like that.
Yeah, I'll send out an email, and I sent one out before, but hopefully I'll get some volunteers this time. Okay, I want to kind of wrap up, because we've got guests that are waiting. And
go ahead, Joanne.
Okay, I want to know. Okay, so if we do our quarterly reports and we say whether or not to hold, sell, or buy, we're willing to sell and hold, but we're not willing to buy. Shouldn't the analysis be thorough enough that we would be able to make a buy decision?
That was my question too, actually. I was just going to want to make a comment, like Air Lease, for example. Because we have had this company for a while. We know that company, right? And so I think that we should make some exceptions.
What was the question? What was the comment?
When we're doing annual reports and quarterly reports, we are willing to do sell and hold, but if we want to buy, but for Henny's comment that we shouldn't, we need to do further research to do more comparison. So
that was just a suggestion. That's my personal
opinion. I think when you do stock studies, Henny, I agree with you. We should look in these areas that you mentioned. But for some companies we have had a long time, and for example, Air Lease actually is a risk taking. And
I'm just saying, if you're going to say that it's a buy, then the study should be complete enough that you should be able to substantiate why.
No, that's a very valid point, Joanne. I don't disagree with that at all.
Yeah.
No,
but what I heard from Matt was kind of like maybe or maybe not, and it wasn't.
My thoughts on Air Lease, this is it's a kind of a risky area. Like I doubled down on it myself when the market dove down. So I'm a little bit up. I lowered my cost basis by a lot. But I would buy it at a lower price. But at the price right now, and the way the market shot up today, I think there'll be a better opportunity down the road.
Okay.
How about we set a
your point
limit?
is well taken, though. I don't disagree with what you said at all, Joanne.
Okay. I just want to make sure that people are doing, if they have a buy opportunity, that they they make it convincing enough that we would buy it if we had the chance to.
Like for at least if we think the price is too high based on today's price, we can set a limit, should we?
I'm not sure what you mean by a limit. Like
not by tomorrow morning, but I say, hey, we will buy if the price dropped to $20 a share.
Yeah, but I guess between now and the next meeting, or in between as well. Like, because you could do that. I thought about that. We could assign somebody to look at the price and say, listen, if it goes down to this, just buy it, even though we're not in a meeting.
I'm the treasurer. I can watch it.
Okay.
So what's our ideal price?
Did you buy it at 40, Tom?
Yeah, I bought some at 40 and I bought some, I think, around 11.
Wow.
It went that low recently?
Yeah, they were like when the market was way down, it went way down.
Good for you, Tom.
Wow. 11. Wow, 52 weeks low is $8.41. Geez, I missed that one.
Well, I sent out an email.
For Airlease? I missed it.
I sent out an email when the air price was way down, plus also a little bit of information about their financial strength. And I was pointing out how far it had fallen. I can send it out again if you want to see it.
And cry?
I'm so sorry, I missed that one.
Well,
yeah.
but I sent it.
I know. Thank you, Tom.
Thank you. Yeah,
thanks,
you
Tom.
sent a lot of good information and articles. So, Airlease, today is 26. So, what do we say? I remember I kind of like during the meeting we talk about Matt was saying if it's a 22, something like that. Like, how do we? What's what price that we should consider?
Ask
we will
Tom.
consider.
I think we just consider the price that it is, right? I mean, I don't know.
I'm thinking like 16 or 18.
Oh, wow, really?
I'm thinking it will be lower next month than it is now.
Oh, wow. Okay, Tom, can you max that? I just can't. Oh, maybe 5 years. That's 6 months. So that's the lowest. It's $10. Okay. So today is at 26.
We could just set the limit price at, I mean, the upper end of the buy range is 23. So that's probably where we could do it. If we want to do it, we still have to vote, which we haven't done. So we can do that next meeting.
Yeah.
What I don't like is we're so much in cash. I hope next meeting we could buy a few things.
Agree.
I'll keep an eye on what Buffett is buying.
Didn't that come out with the 13F?
He's been buying Berkshire Hathaway.
He has been?
What's the price?
Exactly.
Yeah, let's buy one of those.
What's the price?
Oh, we don't have any money.
It was 10,000? How much?
Something like that, yeah. I think it's
No. It's 2 something. The Berkshire B is like 2 something.
Has it been buying back
A.
shares? I thought he wasn't buying back many shares. As people were saying, he's just selling stuff.
I think he has recently.
Okay.
Are there any more motions?
Yeah.
Well,
Matt,
we still have this Airlease thing.
Airlease, yeah.
Okay, I move we buy some if it hits 18, and I'll watch.
1,000 worth or 2,000 worth or
18.
Yeah, we only have 2.5% of our portfolios areas.
But you know, it's open
Because
for
it dropped
discussion.
today.
How much? How
I
much?
discussed that.
How much?
I discussed that I second that motion.
Or
How much? You said by some. How much? The sum.
we could do it in steps. We could do $1,000 at 20 and another 1,000 or at 18 if it falls that low.
Another 1,023. I don't know. Did the math set 23?
Yeah, 23 was the upper end of the buy rate.
Okay.
So
it'll probably hit that tomorrow.
Yeah.
yeah, the way it's been going for sure.
You know, it was up 16% today. So, you know, it could have been like a short squeeze or something.
Okay, so the motion I'm going to send out, just let me know if this is correct before I do it. Buy $1,000 of air lease at 18 and another 1,000 at 20.
Okay.
Is that correct? Is that right, Tom?
Yes.
Okay, it's.
I vote yes. I vote yes.
Okay, I just sent it out.
Okay.
Yes, vote.
Current motion. Okay. Okay.
Current motions.
Okay, there we go.
6 yes.
Okay.
And then Bernard is 7 because he said he voted yes.
Yeah.
Okay. All right. Any other? I'd like to open the floor up to our guests because we've kept them waiting a long time. So.
Okay. Yeah. Go for it.
Mind. How do I do that, Jay?
Oh, you just go to the attendees, and I can help you to open the mic.
Okay. So the first one is Ariel.
Hey.
Hey.
Hello.
She wants to join. She's asking how to be part of.
Because what happens is I don't have anybody to talk about this stuff to, and everybody that I know just gives me like they roll their eyes, like, and so I
We love
stocks.
Yeah, I love this is so much fun.
All right, let me put you in touch with Jay, and she'll explain how you can join. Jay, do you have Ariel's email address?
No, she just emailed the club, and so she said how to join it. Anyway, I told her that we will answer the question at the end. I said just in case other members have similar questions.
Yeah, so I don't know what the cost is and what's involved. Like, do I take a class? Do I have to, because the way that you're doing the stock evaluation is a different system, and I'm interested in learning it, but I'm just interested in the cost.
Oh, okay. So are you a BetterInvesting member?
Not yet, no.
Oh, okay.
I just signed up for the free webinar, this free class, yeah.
Oh, okay. So join our club is totally free. We are just an online investment club, a stock investment, because right now we only invest in stocks, and we follow better investing principles and guidelines. And
we use their software. We use better investing software.
Yeah.
So we also use better investing software. The software that you see, we call SSG. It's called the Stock Selection Guide. Stock Selection Guide. So we use better investing software, and we use their data. And to join our club is free. The only requirement we want you to have is, in terms of membership, is to be a better investing member. Actually, you will get.
So you can use the software, and the cost is 100. I think to join Better Investing, 140 a year.
Wow.
US.
Wow.
Is that a lot? Is it very little? It's a breakdown. I think they just raised the price. Used to be just about $10 a month. So for me, it is the best ever invested.
Yeah. No, I mean, so I just started doing this, and I just basically joined different kinds of subscriptions, and I'm just want to see which one I like best, and then I'm like Nick. So this year I'm spending a lot on different kinds of subscriptions, like one to Simply Wall Street, one to Morningstar, and getting my style, you know.
I
So
can tell you, Morningstar you can get for free in your local library with your local library. And
yeah,
we
not during
have so
COVID.
no, it's all online. It's everything's online. And then like a
Okay.
value line, there are so many. And with Better Investing, they also offer so many great classes that you can take.
Right.
If you miss a class, everything's recorded, and so that's the only requirement with us. But become our club member because we invest everything is hypothetically. We don't invest real money, but we take it serious. We treat it as like investing real money. But for us, it's just an educational goal for us to learn how to invest. And
the other thing is, if you are not comfortable like joining Better Investing right now, you're more than welcome to just drop in and listen in to these meetings when we have, on a monthly basis until you're ready to join.
Oh, okay. Yeah. No, I
These
mean,
meetings are open to the public, so they're free and open to the public.
right.
I mean, I could pitch stocks based on the system that I'm currently using, but that doesn't make any sense because you have your system, so that wouldn't be
Also, yeah, we are fundamental investors.
right.
So we are not doing technical. We do education topics like Henny talk about options, but when we do, we are fundamental. We only focus on management.
Yeah. Mm-hmm.
Okay.
And also long term, as a long term, we project next 5 years returns. Double our money in next 5 years. That's our goal for the company that we invest.
So my goal is a little bit different, and that's why I got into doing this on my own. Is that what happened was, I'm nearing retirement, and I decided to look at the holdings of all these portfolios that I had for my retirement, especially once everything did a crash. Right. So where is my money?
Right.
And and I found out that basically I thought that I was diversified in all these different mutual funds, but they were all invested in the same companies.
Right.
So not only that, some of these companies, for example, like Philip Morris or McDonald's, are something that I don't really feel comfortable investing in personally, even if they make money. So I felt like I wanted to start doing this on my own.
Right.
So yeah,
you are on the right track. I actually started also with mutual fund with my company retirement retirement account. But I started gaining confidence. Everything now I just redirected doing called the PCRA, like a self-direct. So my majority of money, I want to handpick my own all these stocks rather than the mutual fund.
That's right. Yeah, but I'm coming in late in life, but I'm eager to learn. So
right.
Yeah.
I think you're at the right place.
Okay.
So yeah, just join our meeting and then the next couple months and then see how see this is the first time for you and just check in with us, see how you like the format, and then we can talk more if you're interested.
Yeah. Okay. So say I say like tomorrow I subscribe to Better Investing. Do they send me videos or something educational? Like, is there a path that to learn what I'm doing?
Tons of information online.
Okay.
And it's all it's all at your own pace.
All right. Okay, cool. Yeah.
You may also check out their YouTube too. They have a YouTube.
And then if you the other thing is if you ever need any help or don't understand anything, you can reach out to one of us.
Yeah, so one of the things, so I did see I did watch the free video on YouTube, right? And it shows basically the way that you value a stock. And somebody during this meeting mentioned that they had a hard time finding the EPS for this company. And that's actually my question, like how, I mean, you take different sources and they'll give you a different PE, they'll give you a different EPS, so how do it's very hard to value a stock then if you can't get a reliable number.
I would go to the 10Qs and 10Ks myself if you know how to calculate it, or I would just learn that and then go to the 10Qs and 10Ks, the annual reports and the quarterly reports on the SEC
Okay,
website.
you got to go into it. Okay.
So for
I mean, you
us,
don't have to. It's not going to be that much different, I would think, between the different. They are different. I know what you're talking about, but I don't think they're too far off either, honestly. But maybe I'm wrong.
Well, then you have the trailing PE, then you have the forward PE. You know, I mean, it's like and then they'll calculate it. Like, look, one website will do calendar year, and another will do the fiscal year, and the fiscal years are different from each company. And
that's still talking about trailing 12 months.
yeah.
And which you join Better Investing, you will learn all that.
Okay.
And
Yeah.
the software actually.
I'm gonna, Jay, I'm sorry, I'm gonna just move on.
Okay.
Okay.
Just to get to some of the other guests, because we still have
Okay.
quite a few here.
Thank you.
And then we can come back.
Oh yeah, Ari, we can.
Okay.
Yeah.
All right.
Touch
So
All right.
Brian,
Actually, I gotta go have dinner. So why don't you follow up with me by email if that's okay?
Okay. Yes.
Great.
Sounds
All right.
good.
Nice
Okay.
meeting you all.
All
Okay.
right.
thank you.
Yeah.
Bye-bye.
Nice meeting you. Bye. Brian Koenig.
Okay. Yeah, I'm sorry that she left. I was going to mention that Better Investing has